liquidity voids, but we won't get into that just yet. Let me move this shit. Okay, there we go. All right, so price was only delivered on one side. Like if you look at the wicks, we can expect price to trade back to that, and it did here. And that's part of it. You know, when it was rebalancing this price range, it came back to this right here, which was a fair value gap, but then it broke lower. In other words, it showed weakness because it could have ran for these stops. If we were in a buy program, why would it not target these old highs? Because price wants to be driven lower, so that way, or even driven below old lows, so that way smart money and large institutions can pair their orders below an old low. The same way that they're going to pair their short positions to willing buyers or buy stops above these old highs, as it does here, as it does here, as it will here. And that's what we're anticipating. So it doesn't go much further than that. All right, I'm going to do this the same thing, right, on NQ. That's because this shit is fun, bro. Like, what the fuck? This shit is actually fun. Okay, hold on. So listen, expect DOL, expect to draw on liquidity. Let's go ahead and vertical, okay. Vertical, and November 1st. Boom. Okay. So we're going to do cast backwards and cast forwards. And of course, it's going to be very similar, you know what I mean? But this is helping us to define a long-term range on where we can expect price to go. And obviously, now that we're running those highs, I mean, we're literally exhausting liquidity. When price trades above this high or these relative equal highs, the willingness for us to see a movement to the sell side with all these untested lows, with this low here, this low here, this low here, right? It is a no-brainer that we will expect price. There will be no more liquidity. Okay, after that high is taken out with these high impact news drivers this week, that's what I'm anticipating. I'm telling you guys, watch FOMC, CPI, watch these high impact news drivers push price above this high. I'm calling it now, okay? That's my expectation. And let's begin. Alright, hold on. I don't know why that's so funny to me. Alright, so listen. 20 bars. Boom. So 20. Let's get this done real quick. 40. Boom. 60. 60. Oh, dude, I didn't talk about open float. All right, let me talk about open float too. All right, hold on. Getting ahead of myself again. All right, 60 bars, 60. So let's go out there. I think that's 60. Let me make sure. It is. It's 60. Okay, cool. All right, and we'll just label these 60, 40, 20. Okay. Well, as for open float, I mean, if you look in the last 60 days, the most recent high, in fact, it's actually right. Where's the most recent high? No, that's not in the 6-day range. The 6-day range, it's really just trying to see where the high is. Like, really, I mean, 60 days, and let me clear that out. 60 days prior, we had this high. Price ran above that high, but it only did it to take buy stops, or not to take buy stops, sorry, to trade back to this order block, because we were at a point where we could expect a quarterly shift within that time. So we had this low, we had this aggressive low below it, and then later on during the 40-day, or like during the cast backward 40 days, from there we have a new low form, which was relevant later on because we were in a sell program. So boom, liquidity gets taken there, but also we created a new intermediate term high. It's an intermediate term high for two reasons. Well, first, a lower high to the left, a lower high to the right. We can notice that right off the bat. But additionally, there are buy stops above this high, and apart from it being an intermediate term high, you can see even after the fact, because we were doing a cast back perspective, that price stayed away for a while. In fact, when it came here, 20 days cast back perspective, okay, price came here to rebalance this price range. The same thing that I was explaining for ES, just more defined here. Of course, we have this little gap. That's a result of the contract. Boom. Breaks lower. What does it do? Runs these sell side. Runs this level of sell side. Then what does it do? Consolidate. What does it do during the cast back 20? Well, it moved back to rebalance that price range. And then boom. Aggressive movement lower. Creates our low. And then we have our quarterly shift. And we move into a buy program where price just slices through all these highs like butter. Okay. Now, the other levels that are relevant when we do this cast back perspective are these different gaps right here, right? We have this gap or fair value gap here, which this was actually rebalanced. Take that back. This was rebalanced when price traded here. We note these levels of quick movement, such as here, here, and again, we can define a range. So let me do this. Actually mark this as a level of sell side. We'll refine this more. Sell side. Side. And this doesn't, I'm using this in correlation with what I already know when I'm looking at a higher time frame. So I'm casting back to see the quarterly shift. I'm really paying attention to what ICT is calling an IPDA data range. So I have a perspective of looking back 20 days, looking back 40 days, looking back 60 days. I know within these time frames that I can expect a quarterly shift. And if ICT was wrong, right? If again the algorithm that drives price, which this makes complete sense, and honestly this really solidifies it, right? The algorithm that drives price, this would not happen if there wasn't an algorithm that drives price. An example, like I said, the 60-day, where the 60-day, we had the quarterly shift within the 60 days, which was running out this low prior to it. Okay. Then what did we have with this large displacement? Well, we had a consolidation, last up close before the down move. Price trades back to it. Boom, aggressive move lower. We have this low here. Price actually takes those stops, then rebalances this price range here. Continues lower to take out now these relative equal lows that formed here. Boom, level of sell side created. Now, what do we have? Quarterly shift. So the first thing, all right. So we have our 20 back. Let's go ahead and do our cast forward. It's really not much to be said outside of that, but what do we have? Well, we also have a defined range, okay? Between this high and this high. So we know price is in a buy program, and now we're focusing on what price is currently doing. So let's go, you get the 60-day first, because like that's honestly not the hardest, but anyways, all right, 60, boom, 60 days. All right. Right. Okay. Ruler 40. Damn it. That's the only thing annoying about the ruler, is if you click off, you lose it. So we can measure that, and from here to here is 40 days. And the idea is that each quarter, not every quarter, but we can expect some kind of shift depending on the underlying institutional order flow and what the market is telling us, right? And again, these large banks, they use these higher time frames. Which one am I marking? Okay, that's a 40. These large banks use those higher time frame charts, and these large funds are also trend following in nature, as ICT talks about. Okay. Boom. 20. I believe this is 20, but I don't know. Let's see. Was I right? Was it right? It looks a little longer. Let's see. 20. Boom. No way I was right. Let me make sure, because it was covering it. No way I got that right without even looking. think it's actually 21. I was one off. All right, well, close enough, you know. All right, and then 20, top right. All right, so now we have our cast forward perspective. Okay, so what do we really see here? Well, from November 1st, we cast back 20 days. We see price, trade, rebounds this range that was inefficiently traded to the downside. Price retrades it. Boom, aggressive run lower. We also have this liquidity pool forming from 60, creates a relative equal low with the 40s. These lows remain intact. And then on the 20, after price rebalances that, and we are reasonably expecting a quarterly shift, liquidity pool, aggressive run below it. Price pairs the short positions that they have up here with the stops below these lows. Then we have these old highs. Like, again, they get ran through. First 20 days here. Can we notice from November 1st in the last 20 days from where we are now? Because that's really what it is. Well, price started aggressively running towards these buy stops. And it ran them out. And it didn't show a willingness to go lower. No. We see it aggressively running up. And again, what other reason would price be coming up here? Is price just coming up here because it's all random? Price just wants to move up here and that's it, you know. At the end of the day, it's just random, right? It's not random. All right, listen. Here we go. What have I been framing? Untested monthly high. This is so fucking ugly. All right, give me 1 second. I gotta clear this shit. Off the monthly. Because that shit is fucking ugly on this shit. Hold on. Give me 1 sec. Sorry, I did not like that. In fact, let me put on the only time I really need these is going to be on the daily. I don't need these on the higher time frame. That shit is distracting and ugly. All right, here we go. Boom. The 20, you can't even see it, it's so small. All right. In fact, why do I even have, see, shit like this? Like, why would this be a level of sell side? I don't even. Oh, it's a level of sell side. It is. I know it is. It's on a lower time frame. Let me delete it from here. Okay. This level of sell side is also not relevant on this time frame. Just muddies up the chart. Gotta clean these up a little bit. I'm gonna mark this clean those. There's the sell side. There's a little sell side. And here's what I mean when I say we're in a buy program. Give me 1 moment. Sell side. Sell side. Okay. So listen, the same thing. We're watching the same thing. All right. We see price from this high. We see that market structure shift. Okay. Price trades back to that low, and afterwards runs out the most recent low it made. Now we have a market structure shift here, which of course on the monthly isn't so clear. But we have another market structure shift here. And you can tell it is because price moves into a buy program, right? But we have a aggressive run now from a consolidation. Price moves away from it. Here we go. This order block. Last down close for the up move. It's a little messy. So it actually just trades the wick. But we're on a higher time frame. So this would make more sense on a lower time frame. Price trades the low here. So now that we've ran that out, now that we know price is not respecting this as an order block and price is not going to use this consolidation to propel price lower, and that is going to run out these highs because we passed the mean threshold, we can reasonably expect the stops above this high to be ran. Okay? And it's funny because really, if you think of what we're looking at, here's November, what I marked 3 months ago, completely bullish. That's a quarter. That's a quarterly shift. Okay? Like a quarter of a year. That's literally right there. Like you're literally watching it. Like that's crazy. Right? That's fucking so cool. Alright, and then awesome. Like I said, price is targeting these highs. Is it any different here? No. These fucking ugly ass lines are still on this chart. Still on this fucking chart. Weeks, days. Right now, I need it on the days, not the months. That's what I don't want. Alright, there we go. And this is my like institutional, like I'm following institutional reference points on this chart, so I really want to keep it clean to see the levels of buy side that stand out to me. I don't want to muddy it up with too much stuff that's not necessarily relevant or helpful to me. So anyways, I'm just removing this shit. Okay. And I'll take this off the, yeah, we'll just keep that on the daily. Okay. So here we go. Level of sell side, sell side. Here's how we know it's a buy program. This level of sell side taken? No. Run above this high? Yes. Relative equal lows? Yes. Last 3 months? Bearish? Yes. Price ran out stops below this low? Yes. After it ran out those stops, turtle soup, wicks do the damage, bodies just trade to the level, false break below an old low. What does price do after? Move aggressively. What is this? A quarterly shift? Where is it? Give me one moment. This is back in January. So January from, is this the span? I think this is the span of the year. Yes. So that's January 20, yeah, that's January 2023. So we had that, and on the weekly, it will be more refined. But from, let's see, January, September, August. Let's see, January. There we go. So January, start of the year. What do we see? Price runs these lows, breaks slightly just below it. Then aggressive run above this high. What does it do after? Trades back to that. Why is that relevant? Well, because this is a consolidation. Price is moving sideways, not in any specific direction, just moving sideways. Okay, and the last down close candles before the up move, order block. Price trades back to that. Okay, and then what does it do? Well, we have this high here, aggressively runs that. This high here, aggressively runs that. And you get the idea. You know, I've been saying bullish, bullish, bullish. Like I haven't changed my bias. Like I'm still bullish. Okay, I was, you know, hypothetically expecting bearish prices depending on how price reacted to that. But now it's tipped its hand. It's shown us, hey, I'm not respecting that order block. I'm going for the liquidity above those highs. I'm going for those stops. Let's go down to our higher time frame, and now we can take what we, you know, just had there on the daily perspective, and we can look at it here. Let me make sure. I don't know what the fuck. Let me just delete these because that shit is ugly. I don't even know what these are from. Like what I was looking at there. Okay, anyways. Delete that. Come on, where's the thing? We got to delete that. Okay. Alright. So now that we have our higher time frame perspective, like we know where price is drawing to on a higher time frame. In other words, the institutional time frame, if you will, because that's what these large institutions use. Now we can see from here, which was this high, 4618, 4681. Okay, and bear in mind, this is a lot slower. But we've ran above those highs. We're at a time that we can reasonably expecting a quarterly shift. All right, and more importantly, we have these highs back here. Right back here. Okay, what's above these highs? Why is it relevant? Why will price return to that? Because this is a previous institutional level of selling. This is also, there are large funds. There are pending orders in the form of stops above this high. And the market, while it doesn't know where is where, it's going to refer to past data in the algorithm, and we can reasonably expect it to run those highs. And for NQ, it's obviously significantly more apparent when we look at it. Let's put that here, and then I'm just going to mark this as a little buy side. In fact, let's go to the highest high just to do that. Okay. So we'll go move this here. All right. So here we go. The price is going to go lower from here. We would see it respect the mean threshold of the order block. Price is saying, no, I'm taking these buy stops. Price, like I said, is not going to just go up here to go lower. We are in a buy program. we've been in a buy program. Last 3 months. And even here, even with those 3 months, that quarterly shift, like it just targeted these relative equal lows back here that I mentioned previously. And then after it ran out those lows and rebalanced that price range, it went higher. It aggressively moved higher. And it left the lows down here, these untested lows, the lows down here, it left them all intact. We're in a buy program. Right? Even though price traded below a few lows here, you still see it wanting to move to the buy side. And we note the untested lows and highs, so we can see that as well. Is this okay? This is defined. I don't know if it says defined as I would like. Hold on. Let me. Oh, actually, let me just take that off because it's annoying me right now. Okay. We had this void here. Price tapped it, didn't go into it. Just went for these relative equal lows, and then aggressively moved higher. Displacement, displacement, running out, buy side. I don't really think there's much more to be said than what's already been said here on this lower time frame. Right? I mean, we're expecting higher prices. We're moving out of a consolidation. The next expected level is that level of buy side liquidity. We're not respecting the order block or the consolidation before that aggressive move. We're in a buy program. When we look at our higher time frames, that's exactly what we are expecting. It's price to move to the buy side. And now we're just watching it unfold. And when we look here at NQ, when I look here at ES, the only thing that I can see is price showing willingness to gravitate towards those highs, right? In an area where we can reasonably expect a quarterly shift. All right, so, and also in a week that we just have these extreme, like, news drivers. Like, look at this. These are the news drivers all week. And I'm going to tell you right now, PMI, FOMC, CPI. If I was a live trader, you think I would trade this week? You think this looks good? No, I would not. I'm not gonna lie. I would spare myself. I would understand that as a large fund trader, I would see this and say, why the fuck would I trade that? I have enough money. I can make my little 5%, and I'm just gonna put that out there now, right? But listen, man. This is what I'm looking at. I can keep ranting, so let me just finish this, all right? Cause man, this shit's just exciting, man. It's exciting because like I'm seeing the levels of liquidity I'm expecting price to draw to them. Now I'm looking at if the data range is like I have a set data range of where I'm watching like price and where it's came from, and I'm actually seeing it happen. Like I'm seeing these quarterly shifts. Like it feels fucking good, dude. Feels good to like actually understand why these markets are driving to where they draw. And honestly, you know, I see people that call ICT a fraud. They call him a scam. All right. And, you know, he said, you know what? I don't need you guys to defend my honor. And honestly, I agree with him. I don't need to defend ICT's honor. Like this shit, if you are an intellectual and you actually want to go and he urges you to prove him wrong. If ICT was wrong in what he's been teaching, he wouldn't have as many funded students as he has. He would not, like, people do not, bro. Okay, let me not even rant about that. But listen, it's like he literally just posted his whole experience, and I just find it funny how people still doubt him. That just proves like haters gonna fucking hate. But anyways, I'm getting off track, dude. I'm just so excited. I'm sorry, man. I feel like euphoric about this shit. So, anyways, when we look on the 4 hour, we can see the daily range. What do we see? Boom. Prices running above these highs, and it's also breaking out of a consolidation. That's what we're really watching here. Not respecting the order block, right? Same thing here. Not much more to be said. Let's look at the weekly range. We can do that here. Okay. Because we are now in a new weekly range. It's really not much to be said than what I referenced on Friday. Like it doesn't change every day. I'm looking at the higher time frames, and it's a high time frame. Like, I'll just say it like that, man. Like, it's not like I'm still gonna record these videos every day because it's beneficial for me to explain and vocalize my thought process and see what I'm thinking, because then I can like later look back at these and be like, oh, I don't agree with that anymore, or I'm explaining it so I can actually like I have a more in-depth understanding because I'm explaining it. And if I get something wrong, that's even better because I'm gonna remember that I was being a doofus and I explained something wrong, right? And that's like been the whole point of these. But anyways, man, let me stop ranting. I got a lot of shit to say. All right, so here we go. You know, last week we look at where we were. What does this look like? Complete sideways price action. Oh, aggressive break out of that. Now, like I said, I know we're running these buy stops. Price may show willingness to trade in this range, and while we can't see the data here specifically on the continuous contract, there's a void there. We obviously can see that price aggressively push through that. So we're seeing price aggressively move out of consolidation, and this is a significant run because it's also showing that it does not want to respect that higher time frame, or block, right? And that's pretty much all that. I mean, I'm gonna just leave it at that. Like, I don't have anything else to say in terms of like the weekly range from last time. Like, all I'm noticing here Monday, boom, breaking out of it. Okay. Weekly, right? Weekly view for the S&P. It's the same thing, dude. It's literally the same fucking thing, like breaking out of it. All right. And I started doing something new on my journal where I put this every day, right? These journal entries, I put these little graph thing so I can see how many days, like I have a visual representation of how many days we have been bullish until we hit that point. And then I can see what price is doing from there by paying attention to the daily candles, the open, high, low, and close. So listen, that's all we can say for the higher time frame. Let's go last. I bet this video is so fucking long. Haha, 27 minutes long. It's just me ranting, dude. I really haven't done much, I'm not gonna lie. But it's fine. Just feel so happy to fucking deep in my understanding, bro. I'm so fucking sick of being broke, dude. I'm so fucking sick of working. I'm so sick of it. God, I'm so fucking sick of it, dude. I want to fucking study till my wrists bleed. Alright. So, consolidation. Break above these highs, and he took those buy stops. Now we're seeing a willingness to move to the buy side, more specifically those highs. But let's, look at the actual daily range, right? Hold on, give me 1 second. Like, let's fucking see what price did today, in reference to the news drivers. So here we are, 12 a.m. There we go. All right. So, and I need to see what time we have those news drivers. But let's say fuck it, dude. I'm just gonna actually like study the fucking daily range. Like, I literally have nothing better to do. Well, I do have to finish one of the videos I was studying this morning, so actually I have one thing I need to do. I have fucking nothing better to do, dude. What am I gonna do? Fucking just sit around and mope and just think about my fucking money situation? I'm so fucking broke, dude. I'm so fucking broke. Goddamn. Fucking struggling, man. Alright, listen. Did I just mark? I think I'm fucking this up. Hold on. I think I really just marked the daily. I think I just marked 12, yeah. So hold on, where is this? Sunday to Monday. Monday. 11 p.m. 12 a.m. There we go. And then, oh yeah. There we go. Got there. Okay, now it looks better. And okay, so today we didn't have, so actually this would be a perfect day. Let's tell you what price did today and just get like a better idea on it. Thank you. Okay. So from the New York midnight open price, this is the Judas swing. So this is the ICT talks about power of three, which is accumulation, manipulation, distribution. When we're looking at the 15-minute time frame, okay, the very first thing we have to do is we have to look back, and we could also more importantly look back at London. All right, and so let's look at the London high and low. So the London high and low are going to form between 2 a.m. and 5 a.m. So it'd be beneficial to move this. Wait, didn't I? Thought I moved that properly. Unless I moved. Hold on. 1 p.m. That's really what I wanted to do. Okay, perfect. 1 a.m. So this is more accurate to the range that we're looking at. So right here is where we see accumulation. And we see it on both sides of the market because we're in a consolidation. And it does this every day. Look, consolidation overnight. Like, you literally see it every day. Consolidation overnight. Like, overnight, price consolidates. And that makes sense because right here, there's no trading. Or a lack of trading. This price is still moving around, right? Anyways. We consolidate. Let's look at the range. 2 a.m. 5. Okay. This is the London highs. These are the London lows right here. All right. And so what happens between the London highs and lows? All right, here we go. 6:15 a.m. So before we're even looking at our charts, we have an underlying bias that price is going to continue driving higher. Okay. We see the London lows taken out. This move, of course, trips traders into thinking like, think about it. If you don't know ICT concepts, you see this, oh yeah, price is gonna go lower. Like I'm looking at this 15-minute time frame. What time frame do I use? Oh yeah, price is definitely going lower. And like, price isn't even targeting these retail traders, but you just have to understand there's liquidity above these old highs, above these old lows. All right, and then boom. So from our consolidation, what do we move into? An expansion. And when does that happen? Well, the 9:30 a.m. equities open. So we then have price. Here we go. The London highs. Boom. Price takes those out. This we'll look at in just a moment. And then we have this aggressive run to the buy side. Now, we did have the, okay, let's see, 1:01 p.m. So let's see, 1:01. So, I mean, it looks like the news driver just did what price was already wanting to do, which was to press higher. All right, and then of course we consolidate later on. But anyways, accumulation, midnight, anything below midnight or near it would be the manipulation, tricking traders to thinking price is going to go lower. And then distribution, we see that aggressive movement to the upside. All right, now let's go to them to 10-minute. So from our shift, in other words, we were consolidating. We see price go higher. What's noticeable here? Same thing with the London highs. Really nothing different than the 15-minute. It's all still noisy. How about we just go straight to the 5-minute? Let's see what we can see. So we're looking, let's look from 8:30. Say I was trading this. So I've seen that liquidity being taken. So now we go 8:30. So 8:30. Here's 8:30 open right here. We have this high. What does price do? Like literally right at 8:30. Price already knows what it's gonna do for the day. And we literally just took sell side. Boom. We have this high. Run above it. Trades to the order block. The last down close candle before the up move. Explosive movement to the upside. How about on a 3-minute time frame? Is it even more refined? Let's see. Okay, here's that sell side. Taken. All right, where's 8:30? 8:30. Start looking for setups. 8:30. Run above this high. Underlying, the underlying expectation is that price will continue higher. Aggressive run above that high. Trades lower. Why does it trade lower? Boom, here. Also, equities open, right? Price trades that order block before it ran out those buy stops. This is a bullish market structure shift. Price trades to that order block before continuing higher. Consolidation, boom, return to an order block, aggressive run higher. Okay, then here. Now, as for targets, that's where it gets a little tricky. And the reason why is, what are we targeting right now on the buy side? That's what we have to ask ourselves. And we have higher time frame objectives, but like, listen, you don't, like I personally, if I was trading this day, I would not know how high it's going to go. Like, even let's go down to a 1 hour, right? Like, I know that I'm expecting higher prices, but there's no, like, old high. Like, we're trading to those old levels that I mentioned on a higher time frame basis, but there's no old high. Like, I'm not. Price is creating new highs every day. Like, the only thing I'm showing is a low, old low. But if we just look at what price has been doing. Like, it's so obvious. Look here, open, closes higher. Okay, here it's the same thing. Well, not exactly, but this day was bearish, but it's just rebalancing this aggressive range to the upside. Afterwards, price returns that order block, aggressive movement. This was on Thursday. Price, of course, wants to close the week higher, so that way the weekly candle, of course, is bullish because price is going to continue higher. Now, price is going higher, and like there's literally no other target. So me personally, while I could probably find a setup like that, I mean, it's where would my exit be? That's a real question. Like, where would I say if I had taken that entry? Where could I be like, okay, this is great? You know what I mean? Like, I could have probably taken profits before lunch or when it started to decline back into this range, but it's just the idea that there's no highs for me to reference, at least not recent highs. It's the same thing here. Like, if you look at these, look, the exact same with the exception that here it continued consolidating, but it actually showed weakness, whereas this was consolidating, but we had a more aggressive movement, and of course we would because it's the Nasdaq, right? But here, let's see if we can frame the same logic even here. Boom, aggressive run above this high here, trades, and actually let me not be a hypocrite. Hold on. Okay, there we go. London lows. Here we go. London low, 350. Ran those lows. London highs. That's not a London high. This is the London high. Boom. After we run the London highs, here we go. This is 1030 or 1040. Okay. So this is getting a little closer to 1130, which is where I'd want to be done. This would not be, for me, something I would want to participate in. This is a lot more back and forth. Like, if you were in this, you just have to keep in mind, you're watching price. Like, we have this aggressive run. We see what we can expect as a potential market structure shift right from here. Run above that high. All right. But when we run above that high, okay, firstly, boom. This candle opens here, goes lower. Okay. Looks up. Boom. From here, closes higher. Trades lower, closes lower. So it's consolidation. Boom. Oh, okay. Starts looking like that, but we have to deal with this aggressive wick. And again, this just really isn't like high probability. Like, ultimately, I would want to look for a liquidity pool to be taken or a more refined order block. I suppose we have that here when price retraces that, but that's also at 1130. I'm not going to be entering in positions in 1130, right? We have this order block. We can see price like actually trade to it accurately, but also with this wick, it's just not like, that would not be a great setup, to be honest, with that wick. Like, that's not a high probability in my opinion. Now, maybe if we go to a lower time frame, here we go, high, I run above that high. Okay, this is the order block, these consecutive down close candles, but still, really, does that look great? No, it doesn't in my opinion, even on a lower time frame. So to wrap this off, my bias on the monthly is bullish. My bias on the weekly is bullish. My bias on the daily, let's go back to it. Bullish. Right? Bullish with this run above this high with how aggressive it is. Here, bullish. Bullish, why? Bullish, expecting price to trade to a higher time frame level of buy side to run out those stops. Same here. Untested monthly high. We have ran out those highs, and we'll see what price wants to do. We'll see if price wants to return to this order block before continuing even higher. But ultimately, I want to watch it happen. And this is what I was saying. The whole time we were consolidating here, I said, oh, this is not enough for me to see lower prices. Like I was saying that. So anyways, higher prices daily. Okay. How about the 4 hour? Higher prices. Higher time frame objective. Right here, higher prices, higher time frame objective. What do we see? Low form, does it run out that low? No. Low form, does it run out that low? No. Low form. Okay, well, this low was taking out these lows and clearing this low, these lows. But how much does it do it by? Let's see. 4, 5, 5, 5, 5. Not even, like, literally, like, not even 10 pips. False break below an old low. Takes those stops just to push price higher. Then target these highs, of course. These lows, of course, get taken out. But these lows remain intact. This low right here, which was additionally a false break below these lows. Barely any aggressive movement. Just tricking traders thinking that this is going lower. Or that this is a level of, support. That's holding a price that's been broken. And then here, these lows remain. These lows remain. These lows remain, right? We have all these sell side objectives that just remain intact. So, of course, we're going to be bullish until we start seeing price want to show a decline and start going for that. And trust me, I'm bearish in the sense of I'm waiting for price to take those higher time frame objectives and then continue lower. But if we're talking about current price action, all right, I'm sorry, but you have to be a fool to be taking sells right now. To see these days where price just overall, like no matter where I was, okay, sure, this day, sure, it was a decline, but no matter where I was, if I entered below the New York price, like let's just look at it. Even in this consolidation, which we know is just going to go back and forth, whipsaw, right? If I was a buyer this day, would have been good. Tracement here, but still closes higher, right? From the open, still close higher, right? Same thing. We have this aggressive run, but this day, price actually trades lower. Okay. How about this day? Well, here's the opening price, and price does close higher, even though it does this, right? From the opening price to here, closes higher. All right. How about from the opening price here to here? Running out these buy stops. Of course, just trading higher, closing higher. Okay. We have an aggressive move, but we also have an aggressive move prior to that. We have this here, displacement to the upside, displacement to the upside. Price trades back to down to that, and then consolidate. Boom. Open, close higher. Okay. All right, this is what I was going over. But anyways, the point I'm making here is we see, and bear in mind I'm looking at a consolidation, so we see a lot of this back and forth, like movement to the sell side and back and forth, but we don't ever see a real aggressive run below those lows. And previous to that, let's look at prior weeks, right? Okay, give me one moment. When we are not in consolidation, when price is showing a clear willingness to move to the buy side, like as it does here, okay, as it does here, as it does here, it's just inching up every time. In these consolidation phases where it wants to go for the liquidity pools, but the liquidity pools below these old lows, with the underlying structure being bullish and understanding those higher time frame objectives, that is even better. Like that's an even better setup for price to break below these lows. It's even better. All right. But ultimately, when you look at the days and we average it out, we see a week of consolidation, but we see what price is really doing and where it's targeting. Okay, and why is price even consolidating here? Right? Just ran out these highs, these highs, these highs, right? Well, the first thing is it's going to trick traders into thinking it's going to go lower by first breaking below this old low here, but not aggressively. Like it's not displacement. It's like from here, what, 4366? It's literally 10 pips. From here to here, it's 10 pips below an old low. We're expecting it to trade 10 to 20, right? Boom. Afterwards, what does it do? Aggressive movement to the upside, taking out those buy stops. Boom. Continues making new ground. Why is it making new ground? It's targeting the highs here, targeting these highs. And every time we run out those highs, may consolidate for a little bit, but then we pay attention to where it goes from the consolidation. Now, this run, above this untested high noted here, 4618, 4684. Based on what I just said, of expecting a 10 to 20 pip false breakout, would you say that that's 10 to 20 pips? No. See countless days where price moves higher, and the only days that it moves lower is when we get to the top of a range, when it breaks below no low. Alright? That's the only days. It's not random at all. And I just have so much more confidence, like, learning this shit. So, anyways, it's a 45-minute video. I've been ranting, but I'm just so excited, man. Like, I'm just so excited to see where I'm going with this, and I'm so excited for the next year, man, because, bro, I'm really struggling right now. And nobody knows, but I'm just struggling so much. So, anyways, I'm gonna leave it at that.